We have a very interesting guest with us as well, Hans Goetti joins in right now. Needs no introduction, a fairly famous voice in India as well. But Hans, thanks so much for taking the time out and joining us today. Are you?
My pleasure.
Even if you were not, and all our Bloomberg Quint viewers would be delighted to have you this morning. If the decision of the Fed to hike rates was not a surprise, did the tone of the Fed surprise you? Especially because the data that came out just before the meeting did seem to suggest that CPI too had fallen, and therefore maybe the Fed will not be so hawkish. But hey, they stuck to the plan.
Well, it does not surprise me. As you mentioned a while ago, we think that the Fed will pause in September. I mean, the rate hike in June was a foregone conclusion, therefore not a surprise. But they may well pause in September because the economy has actually started to slow down quite substantially over the past 6 months. And a lot of this has to do with the fact that the Trump agenda, the tax reform, the infrastructure spending and so on, is being bogged down, is being delayed by events which are purely political, and therefore the decision makers, the long-term decision makers, are holding off, and that leads to slower growth. So we think that the Fed is starting to recognize it. They still look at the labor market and think the labor market is strong. But what we have also been saying is that inflation will come down, and I think the Fed is now starting to realize that inflation may be actually lower for longer, and therefore they may have to be a little bit more dovish in the next few months.
Hans, this is Niraj joining in as well. While I get that point, but the Fed yesterday, at least Janet Yellen didn't accept that these inflation numbers are pointing to a longer term trajectory which is lower than anticipated. She pretty much stuck to the fact that you will reach the 2% mark, that these are noisy numbers and one-offs need to be looked out, looked away from.
Well, we're very skeptical. We actually think that inflation for this cycle has peaked, and that inflation will go lower rather than higher, because there are secular forces which would indicate inflation lower for very much longer. One of them is demographics. I mean, we're talking about a baby boomer generation that is retiring. 1.5 million people every year turn 70 in the United States for the next 15 years, and that is deflationary. Older people spend less money, so the economy will slow down. And the other big secular force is automation, robotics. So you have a lot more in terms of downdraft on cap on labor costs, on wages, and that slows the economy as well. So these are secular trends which will become much more evident as we go along.
Hans, what does this do to flows and EMs? I mean, because of the tone, I think EM currencies, EM markets will start off slightly lower. But if indeed your thesis is that the Fed will not move in September and therefore probably move only in December if they move, does the market take it in its stride? Maybe this is a 1-2 day of a corrective action and then back to winning ways for the EMs?
We think so, because growth in emerging markets is picking up, whereas in the United States it's slowing. So you have the growth differential, which works in favor of emerging markets, and when you have that situation, emerging markets tend to get the inflows, and also financial markets tend to outperform.
Hans, we now have some sort of a process or number on the balance sheet normalization process that the Fed intends to follow. Are those numbers in line with what the market expected? Initial cap about 10 billion a month. There's a lot of fear that that balance sheet normalization, being a liquidity event, may have more bearing on fund flows than rate actions.
Well, it appears to me that they are trying to move in relatively small steps. So they will start small and just not reinvest maturing bonds. And of course, over time, this would step up. But of course, that will depend on the data. And again, if the economy is slowing, they left the door open to reverse that policy. So we'll see how that goes. At least we have a little bit of detail what they're intending to do, but the implementation will be a challenge.
Okay, Hans. Final question from my end at least. What about an India investor? Today, the markets will start off lower, maybe drift lower during the day. But are the events surrounding the Fed a thing of the past post today evening? And therefore, what would you do if you are investing in India or intending to invest in India?
Well, we're still bullish on India. I think India is not very much tied into the global picture, especially not what the Fed is doing. I mean, India is a big economy, and it's what we're looking at is the domestic demand there, and we think that will not cease to exist. So we think India will still be a market to be in, especially in relation to the emerging market space.
Hans, thank you so much for joining us. Appreciate your time. Have a good day ahead.